Hello, and thank you for joining us for today's webinar. With us today are speakers Jim Hall, Carmen Mercado, Monica LaCrue from Freddie Mac, and Claude Spurlock from SC Housing. Today's panelists will be answering your questions at the end of the presentation, so please submit your questions using the Q&A module on your Zoom platform. The presentation will also be made available. We'll have a copy that we can distribute after the session today, and we'll be sending that out to anyone that wants to view it again after today. The webinar will be recorded and archived on the SCR YouTube channel at youtube.com/screaltors. And while you're there, please consider subscribing so that you stay up to date on the latest videos from SCR. Now I'd like to introduce today's moderator, Jim Hall. Jim joined Freddie Mac in 2018 as its single-family affordable lending manager to promote the Freddie Mac FHA Advantage Mortgage Program to FHA lenders and realtors. Prior to this position, he worked at the New Jersey Housing and Mortgage Finance Agency for 12 years as the assistant director in the single-family division. He comes with more than 20 years experience in the private mortgage industry and holds a bachelor's degree in business administration from Rutgers University, Camden. Jim, welcome.
Yes, thank you, Nick, for this opportunity, and thank you, audience, for joining us today. Our partnership with South Carolina Realtors is very, very important to us, and we have a presentation for you today that's going to be action-packed. It's going to be filled with a lot of information, and we hope that it brings value to your day today. We had to make a pivot from actual live meetings. Myself and my team, we travel nationally and we engage with realtors like yourself and lenders throughout the country. But with the pandemic, we've been grounded and we cannot travel, so we have to come to you through this virtual environment. And we've been doing it nationally, and it's been well received. So we hope that you enjoy yourselves today. We have a great lineup of speakers from the Freddie Mac team. We have Carmen Mercado and Monica LaCrue. They are members of our Realtor engagement team, which Carmen leads. And our special guest speaker is from South Carolina Housing, Claude Spurlock. So at this time, I'd like to turn it over to Carmen, and she's going to discuss some important demographics and statistics that are relevant to your areas in South Carolina and many other items. With that, Carmen, please take it away.
Great, thank you so much, Jim. I really appreciate the opportunity to be here today. So welcome, South Carolina, to the Freddie Mac presentation. Our goal today is really to focus on educating you as a real estate professional because you are pivotal in every single transaction. And at Freddie Mac, we understood that providing data in terms of what's happening at a macro level, but also taking a look at what's happening at a more local level and looking at the opportunities within that data. So what I hope today is to convey that information to you, not only from a data macro level, but also kind of give you some tips and tools in terms of how you can leverage this to really conduct more business in your day-to-day business. So with that, what I want to start off is the next slide is really talking a little bit about who we are at Freddie Mac. A lot of people hear Freddie Mac and they're not really sure what we do. We are in the secondary markets. We do not lend directly. So therefore, there may be an assumption that we don't impact the individual transaction. But we really do provide liquidity to the market by purchasing those loans from the lenders that your buyers are working with. And that really helps sustain the market and make sure that the lenders can continue to lend to the buyers that you're showing properties to. So we're kind of really behind the screen. We were formed about 50 years ago, actually. We're just celebrating our 50th anniversary in 1970 by Congress, and our mission was specifically around stabilizing communities, looking at ways that we can prevent foreclosures, and making sure that we are expanding credit responsibly, especially to the low and moderate income buyers. And today, low to moderate income buyers, depending on where you're from, and I'm from Long Island, a very high cost market, and South Carolina, right? Looking at the affordability, low income, moderate income is really not what people may think. So really, how do we help them get into homes? What kind of programs and what kind of resources can we create so that they can sustainably purchase a property? We operate in the single family market, which is in Freddie Mac's world means any property from one to 4 units is considered single family in our world. In the multifamily space is anything that's above that 4, so 5 units or above. Of course, in the capital markets and the secondary markets, finding investors to be able to create that liquidity that all of us need to make sure that we're able to sustain home ownership with the way we have done it across the country for so many years. So what the next slide really helps us understand is, if you can move to the next slide, is a macroeconomic level is Freddie Mac is looking at how we can sustain and create that sustainability and really stabilize the market. And in that response, during the unprecedented times that we find ourselves in with COVID-19, longer than what we anticipated, the reality is that we needed to react. And we did. We provided a lot of guidance around forbearance, about payment deferment, and really foreclosure prevention and moratoriums across the board on any of the loans that Freddie Mac owns. Since then, we have seen that things have changed across the country. That looks very different depending on where you are. So we understand that these are things that are going to impact the housing issues, but we're really optimistic about the data that we'll be sharing with you shortly that kind of really talks to you about what is that landscape today. Always with a caveat, of course, we'll have to see how COVID-19 continues to impact and the longevities and the impact it's going to have on the economy overall. But what we're looking at is working very closely and providing this educational tools to real estate professionals such as yourself so that you can pass that information over to your past clients or current clients who may be looking to buy in this environment. On the next slide, what we're going to take a look at is, so what does this look like? I feel that I've been saying this forever. I'm sure you as a realtor have also been hearing mortgage rates are historically low. And it's true, we have been saying that for quite a while, which is a good thing. It's not something I want to stop saying. Why? Because when I take a look at the mortgage rates and it continues to decline, these are opportunities for you as a real estate agent to really reach out in two lines of your business. As an inactive realtor myself and having sold real estate for many years, understanding what does this mean? What does interest rates mean? Well, what that means is that it could help affordability. Because if you have interest rates that are low and prices that are higher in terms of home prices, then you can go ahead and take a look at how is this going to impact that monthly payment for that buyer. The interest rates are lower, they can afford a little bit more home, right? Because the payment at the end of the day is going to be something they can sustain. The other, so when we look at that, we want to make sure that we're communicating with buyers who may be on the fence of purchasing a property. Although I've heard from your CEO that things have been very active in South Carolina, and that has been very similar across the country. There have been a lot of buyers that have been able to save money. There's always a silver lining, and it's not diminishing the impact that COVID-19 has had on this economy, but we also have to take a look at how do we keep the economy moving forward, and housing has played a pivotal role in that space. Because you have buyers that have been able to save money, whether it's on commuting or childcare or other expenses, and now have a little bit more of a safety neg or a nest egg to actually put a down payment and purchase a property. So that's a good thing when you see interest rates are low. These are the opportunities that you can actually go and access. But there's another part of this that I like to talk about. And I know that as a real estate agent, you're always that trusted advisor reaching out to your past customers as well, making sure that they're in a good place, or if they have any other real estate needs that you may be able to assist them with. So with interest rates this low, it's a great time to refinance because they may be in a higher interest rate loan. They may have obtained an FHA loan or other loan that has a PMI premium. And maybe with the equity gain in the property, plus the reduction of an interest rate, a refinance may be the right thing for them, where they can actually save a lot more money and create more equity over time. So when you're having these conversations with your past customers and touching base with them, maybe ask them, where are you right now on your interest rate? Maybe speak to your lender. So these are great opportunities, and understanding the market is how you can then take this information and really create activity around prospecting, about being that trusted advisor within your community. If you take a look at the next slide, what it really shows us is the overall snapshot. Again, we have to take a look at the economy, as this COVID-19 has been a longer period of time, I think, that anyone could have anticipated. So all of these things may change. So I do have to say that with a caveat. But based on the information, a snapshot of 2020, what we're forecasting is that there's a lot of optimism, and we are looking at home sales actually increase into 2021, and you can see that on the screen. And you're also seeing the pricing of the houses, right, also increasing, and a little bit more loan originations. So these are purchase properties, individuals that are actually purchasing. It's good news for real estate agents. Again, we'll have to take a really close look and have another snapshot. Of course, you're always delayed on your snapshot because you have to wait for the data to come in. But take a look at how is it trending post COVID-19. So if you take a look at the next slide, what we also think about is, okay, well, this is great. We kind of know the macro level economics. What's happening locally? What are some of those markets that are really providing opportunity? And what does my first-time home buyer look like, so that I can make sure that I'm tapping into these markets to be able to sustain my business and really increase your buyer pipeline? So if you take a look at the next slide, what you'll see is that we wanted to do a little deeper dive in terms of the U.S. population, and we're going to show you some more localized data in a minute. But when we look at the average age across America, it's an aging population. No surprise, you've heard this. NAR has done some phenomenal studies around the first-time home buyer and just in general, the buyers and seller profile. If you don't read them, I really encourage you to read them. I love reading those because you get a lot of insights as to what's happening, where's the market moving. But when you take a look at the average first-time home buyer being about age of 33, based on the NAR member profile, you take a look at the demographics within the different diversity groups. The African American and Hispanic diverse groups are actually younger in population, which are going to drive that first-time home buyer. So it's understanding this market, understanding how to tap into these opportunities so that you can be that trusted advisor for them and move them forward when it comes to home ownership. And we're going to look at FICO scores, and we're going to take a look at a few other things that are a little bit more localized. But this paints the picture across America, really what's happening with the diversification of the demographics, with the younger generation being more diverse, and an opportunity that you can access. So the next slide actually paints a little bit of a clearer picture of where that growth is coming from. So as I stated, if you look at the NAR 2019 member profile, it'll say that the median age or the average age of an actual first-time home buyer is 33. About 88% of the first-time home buyer, of that 33%, 88% of those are actually 29 or younger. About 55% are actually between the ages of 30 and 34. So on this slide, what I want to look at is, well, so where is that growth coming from? If I'm going to be focusing on the first-time home buyer, where is that growth coming from? So let's take a look at the second column. The second set of columns shows you 2010 to 2018, and it also shows you the darker blue, the orange, and kind of the lighter orange there represent the diverse communities, such as the Black, African American, Hispanic, and the Asian communities. And you're seeing that there has been continuous growth within that age group, which really relates to the previous slide when we discussed about the African American Hispanic groups being a younger age. So it really is in alignment with what you're seeing on this screen. So what that tells us is that there's a lot of opportunity, especially within the first-time homebuyer segment, that is going to be tapping into the diverse communities and making sure that you're prepared to conduct that business in your real estate market, right? So let's take a look at the next slide. When we look at overall homeownership opportunities, there is a lot of myth around individuals not being mortgage ready. Again, I have to preface that this is pre-COVID, and we have a great research and marketing team and analytics that is constantly looking at this information. And as we continue to stay engaged, we updated information throughout 2021. But when you take a look at mortgage ready, what does this mean for Freddie Mac? These are individuals that are mortgage visible. That means that they actually have a FICO score. They're using credit. They maybe have a credit card, they have banking, maybe they pay their cell phones, things that are actually being reflected on a credit report. They have a FICO score of 620 or better, a debt to income ratio of 25 or less, and they have no foreclosures or bankruptcies in the past 7 years or 84 months. So what this tells us is that if they were to apply for a loan today using actual underwriting guidelines, that they most likely would get approved for a loan. That's 37 million of the total US population. When you look and you break down 24 million millennials, Asian Americans 4.3, Hispanics 7.8, and African Americans 2.9. So you're seeing that there is a great opportunity here for you to conduct business. One last thing I'll say on this slide is you see the mortgage week. We determine mortgage week of individuals that are opposite of the mortgage ready, right? FICO score is lower than 620. Maybe they have some foreclosures or bankruptcies or delinquencies on their credit profile. But another thing that is really true is that when you take a look at a lot of the millennials and the diverse communities, 35% of your credit history is based on history. Millennials will not have that longevity in their credit report. So hence, of course, it is, is determined that they may have a lower FICO score because it's going to take them a little bit more time to build that credit. So mortgage week, and the same applies for the different ethnicity groups, is really the relationship with lending and the relationship with credit. Mortgage week does not necessarily mean that they are bad credit or risk credit. It really could mean it's just a little bit more education is needed so that they actually can use credit longer to create the history, but also understand how to use credit to benefit them going forward. If you take a look at the next slide, one of the most important things is understanding what does this look like for you. And I know that this slide is a little heavy. You're going to get a copy of this, so I'm just going to point out a few things, and then you can actually take a deeper dive when you get this recording. But when you take a look, we took a picture of the U.S. population, and then we took a picture of South Carolina as a whole, and we took a couple of markets. Obviously, we couldn't take the whole state, but we took, Charleston, Greenville, Horry, and York. And what you want to look at is, well, where are the opportunities? So the higher percentage of people that are within that first-time home buyer demographics are actually in Charleston. So it's a great opportunity for those that are from Charleston to reach out to that younger population because you have a large population. But there may be markets that may be outside of Charleston that may be more affordable. And it's having that referral network to make sure that you're conducting and speaking to agents that may fall outside of that immediate Charleston area, but still be able to help these individuals afford a home, maybe with a short commute to work and so on. If you go to the next slide, what it'll also show us on here is what is the average income. We know across America, I mean, we have income disparity for women, we have income disparity amongst the ethnic groups, and although the gap is closing a little bit, we still have a lot of work to do. But what I want to point out here is if you take a look at the overall U.S. Income is about $96,000, give or take, for an individual. And when you start looking and comparing that to South Carolina, and so we stayed with the same counties, Charleston, Greenville, Horry, and York, you start seeing that there's some disparities, but we still have a healthy income. So therefore, we have a healthy income and we have 24 million millennials nationwide that are mortgage ready. How are you tapping into that business? How can you go ahead and making sure that you're reaching them where they want to be reached, that you're speaking to them the way they want to be spoken to? So if you go ahead and you take a look at the next slide, it'll show us the owner occupancy rate. Home ownership occupancy rate in New York is actually the highest, and it could be because of the affordability. But what it shows is across the board that there is still a lot of opportunity. You see the renter occupied rates in Charleston at 36.8, in Greenville at 31.2, and so on. So what this tells us, although you guys have been very busy because the owner occupancy rate is pretty high, there's still room for growth. And that's where you learning the data, understanding the data, and where to tap into these opportunities will help you. It's good business and will help bring more individuals into home ownership. So if you take a look at the next slide, what you'll see is that we talked a little bit about mortgage ready. We talked about being mortgage ready versus mortgage weak and really surrounding that conversation around FICO scores. So overall in the U.S. population, the FICO score is 694. Still a healthy credit score for a conventional loan. which with a low down payment option. And Jim's going to talk a little bit about those loans. There's other loans that are out there within Freddie Mac that really provide a low down payment option that are better options than an FHA for individuals who may want to eliminate the PMI, right? The FHA, you have to stay with the PMI for the life of the loan. At Freddie Mac, our products, you can actually eliminate the PMI once they have 20% equity without a refinance. That's a great conversation to have with potential buyers, as well as your past buyers who may be looking to refinance. But when we take a look at the whole state, South Carolina, you're a little lower at about 668. And when you take a look at some of the other counties that we're looking at, a little higher, right? So you're kind of in par with what the overall U.S., give or take a little bit, healthy scores. You can help individuals into homeownership with these credit scores. So as we transition into Jim, at Freddie Mac, when we take a look at credit scores, at demographics, at data, at age and ethnicities, what we're trying to do is make sure that we're relevant in terms of not only our communication and our data, understanding where these first-time home buyers are living, what are they doing, where do they want to purchase, what exactly can we do to make sure that we're creating and expanding that access to credit in a sustainable and an affordable way. And that's where you come into the picture. We create these products, our lenders work with us, and they leverage our guidelines. But at the end of the day, where the rubber meets the road is that you're actually working with the buyers. So the more you know about products and resources that are available for first-time home buyers or all buyers within the low to moderate income space, the more equipped you are to really turn the table and make sure that they achieve home ownership. With that, I'm going to pass it along to my colleague, Jim Hall, and he's going to talk to you more in depth about a product specifically that can help you help more buyers. So thank you, Jim, for the opportunity.
Thank you, Carmen. That presentation was fantastic, and the information provided is so valuable. And as Nick had mentioned earlier, your association will share this information with you via their website. So I know it's a lot to digest, and we have a limited amount of time, and we don't expect you to write all those numbers down. So you will definitely get a copy of this presentation. And again, I'd like to thank you for joining us today. Jim Hall, I'm an affordable lending manager. My focus on the lender engagement team is building partnerships with housing finance agencies. And what I do is I develop business development strategies with their business development managers, specifically on the East Coast. My territory is from Maine down to Florida. Before I dive into our programs, I'd like to give you a little brief history lesson on really what a housing finance agency is, because quite honestly, the more that I interact with people throughout the country, a lot of people aren't really sure what they are and what they do. And really, before I started in New Jersey housing 15 years ago, I wasn't really quite sure on what a housing finance agency was. So back in the mid-1960s, when Lyndon Johnson was president, he had a vision for America. It was called the Great Society. And within the Great Society, he's most famous for the civil rights legislation that he signed in '64 and the voting rights legislation he signed in '65. But a component of the Great Society was an affordable lending and affordable housing vision. Now, Johnson's administration knew that they couldn't do this strictly on a federal level. So what they did, they started going to states and counties throughout the country, pitching their idea on affordable lending. And so why did they do this? Because they knew that the states and the counties knew their communities better than the federal government. And my old agency in New Jersey was born out of this idea in 1967. Freddie Mac was actually born out of that idea also. As Carmen had mentioned, we were created and chartered by Congress in 1970. And Freddie Mac is mission-based, and our mission is to bring liquidity, stability, and affordability to the marketplace. And housing finance agencies are instrumentalities of government. They are also chartered and mission-based also. So it just seemed to be a perfect partnership for Freddie Mac to look at the housing finance agency industry and where they fit into the lending ecosystem and to partner with them. So what we did, we created a special program called HFA Advantage, and that's tailored specifically for housing finance agency like Claude South Carolina Housing to offer to lenders in South Carolina for their home buyers. And it gets its DNA from our program called Home Possible that maybe you heard of. And Home Possible is the program that lenders can use and deliver directly to Freddie Mac. HFA Advantage, as I mentioned earlier, has to be offered and delivered through South Carolina Housing. So Home Possible and HFA Advantage and our other program, HomeOne, are all 97% LTV programs. That means they're 3% down, which makes them a better and more affordable product than an FHA mortgage. We allow for 105% total loan to value. And what that does, it allows a housing finance agency to put their down payment assistance second mortgage behind our first up to 105% total loan to value. And Claude will discuss further the down payment assistance options that South Carolina Housing offers to the consumers in South Carolina. As far as income limits and education requirements, we defer to the housing finance agency's guidelines. And so again, Claude will let you know what they are at South Carolina Housing. And Monica, if you could advance the slide, please. So what does HFA Advantage do for you as a realtor in South Carolina? It allows you to present another option to your prospective home buyer. Unfortunately, what we found, a lot of lenders have muscle memory, and they put a lot of the prospective home buyers into FHA mortgages, which is quite as expensive. So this is an alternative to FHA financing. And Monica, please advance the slide. One thing I really like to stress on the slide on your screen right now is if you look all the way to the right, as far as support and training, Freddie Mac really prides itself on providing support and training in the marketplace. That's essentially why we're doing a webinar like this. And, and as I mentioned in the introduction, we were on the road doing these type of presentations 60 to 75% of the weeks. So 3 to 4 days, myself, like Carmen and Monica, we would be somewhere in the country talking to realtor groups or lenders and educating and raising awareness to the affordable lending programs and resources and tools that we offer in the marketplace. And please advance the slide, Monica. And this gives you a snapshot of the HFA Advantage mortgage program. It's specifically for one-unit residences. It can be used for purchase or no cash out refinancing. Again, the 97% LTV, 3% down, and 105% TLTV. It has to be underwritten and improved through our automated underwriting system, which is called Loan Product Advisor. The acronym that's used in the industry is LPA. There's no reserves required. Again, income limits and education requirements are determined by the housing finance agencies. And we have flexible MI, and this is very, very important to note here. And if you could advance the slide, please. We have charter level mortgage insurance on this program. Now, standard mortgage insurance on a 3% down, 97% LTV conventional loan, the consumer pays 35%. On HFA Advantage, they pay 18%. And as you can see, that's almost half of what the standard mortgage insurance is for 97% LTV. It's substantial savings for the consumer. And if your lender is not offering this program, I would say please ask them why. And if they don't want to offer it, you can always contact Claude and he'll go over the lender list that South Carolina Housing has available, and then he'll educate you on how to get in touch with them. Please advance the slide, please. Okay, this is a snapshot of the HFA Advantage versus an FHA loan. Carmen had mentioned earlier that the FHA mortgage insurance stays on for the life of the loan. When a conventional loan, it sunsets at 80% LTV and can go away. Again, that's an important affordable note and a substantial savings to the consumer. FHA also has upfront mortgage insurance, which can be quite costly and included in the loan amount, which the consumer pays for the life of the loan. Again, on our program, HFA Advantage, there's only the monthly premium that's involved. Okay, please advance the slide. So our three affordable programs, again, HFA Advantage, it's based on home possible underwriting requirements. We do defer to the Housing Finance Agency if they have any particular requirements or add-ons. 1 unit, primary residence. Claude will go over the property types that South Carolina Housing offers. State and local HFA down payment assistance is available. I went over the charter level mortgage insurance at 18%. Home possible is available for lenders to use and delivered directly to Freddie Mac. That's for 1 to 4 units. It also is 3% down. It's capped at 80% area median income, and so you do have to make that note. Whereas HomeOne does not have income limits, okay, and that also is 1 unit only, and it is at the standard mortgage insurance of 35%. And with that, I'm going to turn it over to my friend Claude Spurlock at South Carolina Housing. I had the privilege of doing a road show with Claude last August, and he showed me all around the state of South Carolina, and we got to know each other well. And if you remember in Nick's introduction, he said, I'm from New Jersey. So Claude told me, when I was traveling around South Carolina, that I had to throw in a y'all once in a while. And I said, well, Claude, up here in New Jersey, we say use guys. So I'm going to do this for Claude. I hope you all enjoyed this this presentation, and I'm going to turn it over to my friend Claude Spurlock. Claude, your time.
Great, thank you very much. Yeah. Well, most of y'all probably know me. I have been working with state housing for about 18 years now. But I want to talk about first our standard bond program that unfortunately is not Freddie Mac, but we're going to talk about just a few minutes. And then we'll talk about the Home Advantage that we partner with Freddie Mac. And just as a couple of things, why do business with us? Because your clients need down payment assistance, and we have it available. And it helps lenders with their CR plan and a few other things that's out there. So we'll go to the next slide. SC Housing has 3 basic programs. We have our homebuyer program that is a standard bond program, and it can be conventional, FHA, VA, or USDA, all 30-year fixed rate mortgages. And most of the time, it's a very competitive interest rate. Our Home Advantage that we partner with Freddie Mac with is a conventional program with reduced MI and 18% MI coverage. So, that is huge on our thing. And one thing to remember on all our programs is that we have no penalties for credit score. So if you have a 620 credit borrower or a 800 credit borrower, they get the same rate with SC Housing, which is very nice to do for these people that have that lower credit score. And our third program that we have is our mortgage credit certificate that can actually give your borrower a federal tax credit of up to 50% of their interest per year, up to $2,000 for getting a loan with SC Housing or one of our lending partners. Next slide. On our bond program, it can be conventional, FHA, VA, or USDA. And it's a first-time home buyer program, but it's kind of a little odd program, first-time home buyer program. You have 12 non-targeted counties. You've got these 12 counties, and these mostly economically developed counties. And the definition of first-time home buyer is you cannot own a house in the last 3 years. So if your client has not owned a house in the last 3 years in any of these counties, they qualify as a first-time home buyer. The other 34 counties in the state is called targeted. And as long as they sell their current home by time of closing, then they're considered a first-time home buyer. So someone in, say, Richland County can sell their house at 10 o'clock and at 10:01 buy one in Newberry County, and they're a first-time home buyer with us. So even though it was first-time home buyer, there's little ways to get around it. And also in these 12 counties, if you're a veteran that's been discharged the last 25 years, or if you're 100% disabled, or if you're a single parent with a child under the age of 18, we'll actually waive the first-time home buyer rule. So there's a lot of different things that you can get with SC Housing. We also have income and house price limits. Next slide, please. And you'll notice these are the brand new 2020 limits. They came out in June. And just to see how they work is, now bond programs are 100% total household income. So every income that's coming in from everybody 18 years older that's living in the house, we have to count that income. So the total household income, say in Richland County, you'll see there under Calhoun Fairfield election in Richland, it's for one or two persons is 58,100,000, and the house price can be 225,000 is the maximum sales price for a 10-year forgivable down payment assistance. If they are above those income limits or the house price is above that, you can go to the second chart, and you'll notice that in Richland County, one or two person in the household can make 72,600. 3 or more can make 83,490, and a $300,000 sales price. So if they're below that number, they get a 20-year forgivable down payment assistance. It just sits there. There's no payments, no interest. It just sits there for the time frame and just goes away at the end. But you'll notice if you go down, if you got anybody there on the call that from Berkeley or Beaufort, look at those numbers: 97.2 in Berkeley, 113.4. in a $300,000 sales price. So the income limits have definitely gone up in the last few years. And so a lot more people qualify for our programs. At the very bottom, you'll notice that we have our Fannie Mae and Freddie Mac HFA Advantage for Freddie Mac program. And those you actually use the 80% AMI from the Home Possible chart that you have, the lender will have to go online and see what the income limit for that. From that program is just the income for the that's put on the application, not total household income. Next slide, please. Just as a little bit of information on our loan, they're all basically 100% financing. They're 96.5 for FHA, 100% USDA, 97% conventional. The credit score is 620 FHA, VA 640 for USDA, and actually now it's 640 for conventionals. That has changed. That one needs to be updated, but we do have that. And the qualifying ratio is 45%, and that is a maximum for our DTI is 45 across the board. Interested parties, countries is the same. Reserve requirements, we don't have any on here. So as if they are getting our down payment, the seller's paying the closing costs, they can really get into a house with no money down. The MCC cannot be used with our bond program. Eligible properties, they vary by program, but basically what it is any single family residence, condo, patio homes, anything like that. You cannot do mobile homes. Okay, so so you can do true off-frame modulars, but no mobile homes at all with any of our programs are allowed. There is federal recapture on our loans, but we do refund it to the borrower if they ever have to pay it. And homebuyer education is required on all our first-time home buyers. Next slide, please. Our down payment assistance is today is $6,000, but we announced yesterday at 4 o'clock that as of Monday, our down payment assistance will be $7,000 for our bond program, and that can be done for a down payment, closing cost, or prepaids. It is a lien that will be on the loan, and it is there for either a 10 or 20-year term. Here again, as we talked about earlier, is based on the income and sales price for that. But there's no payments, no interest, so it does not affect your borrower's ability to qualify by getting our down payment assistance. Next slide. The rates are posted daily. Today, our rates are 3.5 for our FHA, VA, and USDA program. Conventional is 3 3/4 today, and they will fluctuate from day to day, so they can change at any time. They are all 30-year fixed rate mortgages, and our rate locks are 60 days, and all you have to do is close in the 60-day period. Now, that doesn't mean you need 60 days. We have a lot of loans that close in 30, 45 days. A few do go to 60 days, but that's normally there's a problem with the underwriting. On new construction, you actually get a 120-day rate lock on new construction and a one-time float down if our rates drop any time during construction up to 2 weeks of closing. So now, even though you've got all this time to close, our underwriting times have not changed. Even with COVID, we are still on a 2 to 3 day turnaround, with most files being done within 2 days. So if your lenders are telling you longer than that, you can check with me to see if where your file is in the line. But we have done very well with that. We have a 1 day turnaround for conditions for all our programs. Next slide. Just to know, there will be a 1 origination fee on all our loans, and there are 2 fees that are added. There's a funding fee of $400 and a tax serve fee of $82, and that's the only additional fees that we have on the loans. The borrower can get cash back at closing, not to exceed what they put into the deal, and we do not allow HPML and HOEPA loans to be purchased by SC Housing. Next slide, please. Just as a note, we will require a clear CO 100 on all existing homes. And of course, a lead paint statement, which is on your sales contracts, that's really not an issue or anything older than 1979. And our property insurance requirements are $2.5 or $2,500 maximum deductible for our FHA, VA, and USDA. 5% or $5,000 for flood, but a USDA, their requirement is 1%. So please take note of that. Next slide, please. Now let's talk about the Palmetto Home Advantage. All that I've talked about, you can that's the bond program. The Palmetto Home Advantage is the coolest program we actually offer now. And we're really trying to get people to look at it a little more because it has such great options. Here again, 18% MI coverage on a 97% loan. That can save your borrower so much money when they're, and they can qualify for more house because their payment's lower with the 18%. Here again is a HFA preferred product or HFA Advantage for Freddie Mac. And the nice thing about this, it doesn't have to be first-time home buyers. It could be move-up borrowers. It could be repeat borrowers. It could actually be a borrower that has a house that's a great house and they want to rent that house out. They can keep that house and still get down payment assistance to buy their new one with this program. So great, great program. Down payment is 3%, and then the DTI is 45 on a 640 to a 679 credit score. If they have over a 680, we'll actually go to 50% now for the DTI. There is no loan level adjustment for the credit score. So your 640 borrower gets the same rate as our 680 borrower or 800 borrower. So which is really, here again, can save a borrower a lot of money. And like today, if you have someone that doesn't need down payment assistance and want to get this program with the 18% coverage, the rate today is 2.625 fixed for 30 years and 18% MI coverage for a 640 borrower. That is amazing. If they want 3% down, the rate goes to 3.125, and it goes up from there. If they want 4 or 5% down payment from us, the rate goes up with each amount of down payment. Grants are okay. There's no bond requirements. I know I get a lot of from real estate agents about, oh, there's all these forms that they have to fill out and all that. Well, with this program, there's really 2 forms, one the lender signs and one the borrower signs. So it's really no additional forms compared to our bond program. So it's much easier to do than our bond program. The lender is going to underwrite it. We do a quick review, and actually we get 7 documents from the lender to approve this, and it literally takes less than 7 minutes for somebody to get an approval on the Palmetto Home Advantage program. So if they send that in, normally within an hour, they will get their approval back on this program. So it's really just a great program. Next slide. Okay, when the MCC. Now, the down payment assistance on the Palmetto Home Advantage is either 0, 3, 4, or 5% of the loan amount. So if they're getting the 3%, say they have $100,000 sales price, loan be $97,000. The down payment be $29.10, and they'd only need $90 of their own money to get a 90% conventional loan is all they would need. And here again, the rate today would be 3.125. So here again, great program that people just don't know about that we offer. And then our last program is our Mortgage Tax Credit Program, or MCC. And this is an add-on to any of our Palmetto Home Advantage programs, or any loan that the lender is making for your client. They can buy this tax credit. They do have to qualify income, house price limits, and first-time home buyer rules like a bond, but they get 50% of their interest back up to $2,000 a year as a federal tax credit. Think how that can help so many borrowers. And this is just a quick example, $120,000 sales price, 3%, $3,600 the first year for interest, 50% of that is $1,800. And the maximum is 2, so this client would get $1,800. One other nice thing about the MCC is the fact that they can use this to help qualify. If you have a borrower that is really tight on their ratios and just can't quite get there with the ratios, they can add this. Say they're getting the full $2,000. You divide that by 12, that's $166. Again, as additional income to help them qualify for a mortgage. So here again, so if you've got somebody that that's kind of tight, this is a great add-on that can help them get approved for a mortgage. And even not, just to offer this to a client to help them get $2,000 federal tax credit every year, that is huge. Next slide, please. So that's the basics of our programs. I know that's very quick and all, but don't want to go into too much detail. If anybody wants to contact me, there's my contact information right there. And I'll be glad to sit down and talk with them for an hour or 2 hours, however they're going about SC Housing products and what we offer and all. We have 105 lenders that can offer our products throughout South Carolina. Go to schousing.com and click on Homebuyer. You'll see Find a Lending Partner. You can put your county in and get a list of all our loan officers that have been have gone through our classes. And also, when we get classes back and we can do something, and maybe I can do something with the Real Estate Association. We do a training class. We also have a tab where realtors, after going through one of our classes, can be on that website also. So there's another way to get your name and information out to more people. So on there. But that is my part. And thank you all very much.
Thank you, Claude. That was a comprehensive overview of SC Housing's programs, and it really illustrated the important things that you really bring to the table in the lending community and the realtor community in South Carolina. So we really appreciate your partnership, and we'll do many more of these. So thank you, thank you kindly.
Oh boy.
Okay. All right. Next, we have Monica LaCrue, and Monica is part of our Realtor engagement team. She's going to be going over some really, really important tools and resources that we provide to agents throughout the country. Again, you'll be getting a copy of this presentation, so you don't have to write all the links down that she's going to be presenting. And she's coming to you all the way from San Diego, California. So Monica, it is yours.
Thank you, Jim. Thank you so much, and I'm so glad to be with all of you here today. So all the resources and tools that I'm going to go over with you today are free to you. They're designed to both help your buyers and you as a real estate professional. So the first is called My Home, and My Home by Freddie Mac is a consumer-facing website that provides answers to common questions related to home ownership. The website has videos, infographics, and quizzes that your buyers can use to gain knowledge about the home buying process. What's great is the site is not branded, so it's a great pressure-free place for buyers to explore. It's a great tool to use after an open house. When following up with those who attended, include this website in an email. Buyers will be able to view at their own pace and, again, without ads. It's also a great way to fish for more buyers. Post these quizzes and infographics on your social media page. Remind your followers that you are the go-to when it comes time to buying a home. The website also has information for consumers looking to rent, refinance, or sell. So Freddie Mac has many resources and tools to help you reach and educate first-time home buyers. One of my favorites is Credit Smart. Credit Smart teaches consumers how to make sound financial decisions about home ownership. Not only does it highlight how to purchase a home or get ready to purchase a home, it also helps buyers and homeowners avoid foreclosure. There are 12 modules covering topics ranging from restoring your credit, closing on a loan, and avoiding credit traps. It's available in 12 languages, and you can do it online. Or if you want to become certified, you can teach Credit Smart in your community. It's free to get certified and only takes about 4 90-minute sessions. We have another Train the Trainer coming up in October. The information, the dates you can find once you subscribe to our sources here on the link. And again, like Jim said, we'll be able to share this after the presentation. In December of 2019, Freddie Mac created Credit Smart Homebuyer U. It's like Credit Smart in that it provides important education, but this actually goes through the home buying process. It's free to consumers. It's self-paced and available online. I actually took it myself using my cell phone. I found it very engaging and interactive. You can start and stop whenever you want. Maybe your buyer is on their lunch break and wants to do maybe 30 minutes. As soon as they get back home, they can log back in. It remembers exactly where they left off. The whole course takes about 3 hours. One important thing to note about Credit Smart Homebuyer U is that it reaches or it satisfies the home buyer education requirement for buyers using HomeOne or Home Possible. They get a certificate upon completion. It can go straight to you as their real estate professional or their lender of choice. Again, another free tool for you and your buyers. Freddie Mac works with 14 HUD-approved counseling agencies across the country. These centers are a great resource to send your buyers to gain knowledge about the home buying process. Maybe they need a little extra hand-holding. These centers have a lot of resources and tools that they can use to help your buyers get ready to purchase a home. You want the people who work here to know who you are because what they're doing is they're training the future buyers. Also, in today's COVID-19 climate, these centers are a great resource helping struggling borrowers with Freddie Mac-owned mortgages avoid foreclosure. So great resource. Saving for a down payment is obviously one of the largest barriers to home ownership. We've partnered with a company called Down Payment Resources, and they're a consumer-facing website where your buyers or even you can go to learn more about down payment assistance in your area. I encourage you to visit the website and enter the address of one of your listings. You may be surprised to learn that one of the house you're selling is eligible for free money. Freddie Mac has partnered with our sister company Fannie Mae and our regulator FHFA to create an online industry standard clearinghouse of translated documents. Together, we've translated over 500 documents into Spanish, traditional Chinese, and Vietnamese. We're continuing to do work in this space with Korean and Tagalog languages coming soon. It's a free resource for both your buyers and you as a real estate professional. As we saw earlier, the demographics of the future homeowners are changing, and it's important that we provide tools like this to make home possible for all. I encourage you to visit the website and learn an industry term in a new language. I'm going to turn a bit and focus on some of the tools that can help you as a real estate professional. The housing market is always changing, and it's important for you to stay up to date with news and information. Freddie Mac can help you do that. We've created some ebooks that feature Freddie Mac data and insights that showcase needs and opportunities in the market. Also, our Affordable Lending's Insights page is a great page to bookmark. It has quick read articles covering perspectives and behaviors and trends driving the housing market. These insights can be shared directly from our website to your social media page. It's a free resource that will highlight you as a trusted advisor in the industry. This is really exciting. Late last year, Freddie Mac launched our Single Family Home Starts Here podcast. The podcast provides an opportunity to spotlight industry topics, opportunities for growth, and perspectives of Freddie Mac thought leaders. On the latest episode, Mike Zaro of Truist and Freddie Mac's Don Griffin provide insights on how the payment deferral solutions help servicers, borrowers, and the evolving industry. It's no secret that mortgage forbearance can be a huge relief for homeowners affected by COVID-19. However, there's confusion about how and when they're expected to repay any delayed payments and what happens after the forbearance term ends. Listen to this podcast to gain more information about what Freddie Mac is doing to help. All of our podcasts are no more than 10 to 15 minutes, so please listen and subscribe. I want to remind you that everything we covered today is free to you. We can't market to your buyers. We can't sell them anything. We're truly here to be your partner to make home possible. So I ask that you stay connected with us by subscribing to our Real Estate Professionals Resource Center. What we share in our emails are key insights, industry trends, and upcoming events that can keep you informed. To subscribe, go to freddiemac.com/real estate pros. You're going to scroll all the way down to the bottom of the page. You're going to see a little box, enter your email address, and click sign up. Thank you so much for your time today. We really hope that we provided some actionable takeaways that can help you grow your business and reach more buyers. You are the critical link in the home buying process. You are the trusted advisor. You are the one making the dream of homeownership possible for so many out there. We are your cheerleaders on the sideline watching. Thank you so much, and we'll go back to Jim for some Q&A.
Thank you, Monica. Great information. I really, that's why we save you for last, because all these resources and tools are, worth, ending the show with. So hopefully everybody else feels that way, and we'll be able to utilize these tools in their marketing strategies. So at this time, we're going to go to the Q&A session. We have a few questions here in the Q&A. If I could ask our panelists to turn their video on and unmute themselves. All right. All right. Now let me open up the Q&A box here. And it looks like we have a question here that will be for Claude, okay, from Susan. Does this work for mobile homes, and how old?
It will not work for mobile homes. We will allow for off-frame modulars they are treated just as a regular home, but we do not do mobile homes on any of our products.
Okay. And Susan had another statement here, said the new FHA loan. Do you do government FHA loans, Claude?
Yeah, we have, we do our bond program. Our main product on that is our FHA program. So we do tons of FHA loans.
All right. And Monica, you like to make comments on that?
Oh, no, sorry. I was just checking the boxes that we've answered those live.
Okay, it came up if you wanted to answer it. Okay, no problem.
Oh, no.
Okay, and we have a question here from Joanne, and this is for you, Claude. It says, is Palmetto Home Advantage program available to families living outside of South Carolina and wanting to purchase first home in South Carolina? It's a good question.
Well, yeah, if there's no requirement on residence in South Carolina, you could be moving here. So yeah, someone from Georgia can move to South Carolina and use this product. And Georgia does not have an Advantage program right now, as far as I know. I know that North Carolina has a similar program to ours that they offer. So a lot of states have the Permitted Home Advantage, but by just different name.
All righty. And Claude, this one looks like it's for you also, from Audra Lynn. And Audra Lynn asks, when discussing South Carolina housing programs, would it be best to refer the client to the different lenders and suggest that they ask about all of the South Carolina housing programs?
Yeah, basically that's the best way to do it, is have the lender explain to them what they can offer, because each borrower is different. And so they really need to know their situation, see what will be the best state housing product that's available for them. But you've got my contact information. If they want to talk with me, I have no problem with someone calling me and let me talk to them.
All righty. And this next question, I'm going to apologize if I don't pronounce your name correctly, from Nevja. How are borrowers affected if they had to get a deferment due to COVID-19? Will that count against them?
On our programs, if they're back to work, it doesn't really affect them, but they do have to be working and not on deferment at the time of buying the home.
Okay. And Susan asked, and this would be for you, Claude. She says thank you, and you're welcome, Susan, and thank you for joining us. How often is the lender list updated? I see several names of lenders who are with different companies.
That is a problem because the lender gives us the information. So if a loan officer doesn't give us their updated information, it just stays there until they give us the information. So if you see a lender on there that's on the wrong company, let them know to contact me so we can get them updated to the correct company. Same as with the realtors that are on our list, that if you change companies, if you don't tell us, we don't know to change it.
All right. And now let me check the chat box here. We have quite a few questions in there also. And also my colleague Carmen Mercado posted the links in the chat room. If anybody wants to just go in and cut and paste them, they're there for you. And this question is to Claude. Do you have any idea when the training certification for realtors will become available again?
I wish I could tell you I knew, but we're still working from home, and I'm not sure when they're going to let us have a in-person class. We are looking at maybe having a webinar for some realtors. If the association wants to set something up and us do something together, I'll be more than happy to log in and do a training class like we did today for any realtors, even the company. If you have 4 or 5 your agents that want to go through the training, we can set something up small. I have no problem with that. I have plenty of time being at home all the time, so no problem.
All right, great. All right. Lavinia asked, will these contacts be sent to us, or is there a way to print from here? Well, the links that Carmen posted in here, you can cut and paste and print them, but also SC Realtors is going to, post this presentation, which will have all the links for you. And let me scroll down here to see if we have any more questions. Jacqueline says, thank you. I looked into setting something up with your company. Okay. All right. Well, thank you, Jacqueline. And that's it in the chat box. Let me go back to Q&A box. Okay, Claude, here's one from Grace. I just had a client qualified for USDA Direct. A second client did not qualify and makes too much for USDA Guaranteed. Does not have enough cash for FHA. Are there any other programs you discussed today advisable for the client?
Well, USDA can use our bond program. And here again, Monday, they get $7,000 for down payment assistance. So hopefully that'd be enough. As long as they've got a 40 credit score or better, they can qualify for our program.
All right. And that looks like that was the final question. So at this point, we'll wrap it up. And I would like to thank our behind the scenes people, Mike, Sharon, and Chelsea at SC Realtors for assisting us in putting this together. It was a fantastic webinar, and we really appreciate your partnership and all the hard work you did to get this presentation out there to your members. And thank your CEO, Nick, for doing the introduction at the beginning. And with that said, please use these programs. I know we presented a lot of information to you within an hour, so it's a lot to take in and digest. But hopefully, you found value in this hour. And like I said, talk to your lender, find out if they're using Claude's programs. If they're not, go to Claude's lender list. Make sure that you establish a relationship with them, because it's only going to help your prospective home buyers in the future if they know about the programs that SC Housing offers in your communities in South Carolina. So thank you very much and have a great day. Bye-bye.
Bye.
Thank you.